Okie dokie. This looks good. This looks good. Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How you doing out there? Inflation got you? We're financial advisors here at Jazz Wealth. Happy to be here again. Thanks to all of you that met up with us at the Atlanta DCI show last night. Even Josh outside didn't go to the show. He's like, I'm just here to say hi, man. That was cool. Thanks, Josh. We had a good time there. It was a very good event. No cancellations, no rainouts or anything. And next up we'll be seeing you in Murfreesboro and Winston-Salem coming up at the end of the month. I'll keep you posted on that. If you happen to be a fan, happen to be in the area, client, friend, family, whatever it is, come say hi, because we don't get out of this place often. And yeah, happy to be back anyways. Yeah, check out Eric's FinTips videos and as well as mine. Today, Eric had his video post up there. Hope you'll check that out. It's free. It's on our YouTube channel. All is good there. And just ask for subscriptions. I'm supposed to ask for those things. Thumbs up and all that good stuff. And jazzwealth.com. Thanks for checking us out there. Appreciate that. The market was a little odd today. Did you think so? I mean, the obvious thing, the CPI numbers came out. That's the consumer price index. Tomorrow, we'll get the producer price index. So the first day, we actually get the what is the consumer paying more or less for, and we're paying a lot more for things. And then tomorrow, we'll find out what do the producers have to pay? What's their inflation rate for the things that they buy to, make stuff that we eventually will hopefully buy? So CPI up another 1.3% month over month. That puts us over 9% year over year. Remember, when you see that 9.1% number, that means compared to this time last year. So 9% inflation. It's high. Either way you look at it, it's really high. It's officially 1.5% higher than the average annualized returns of the SPY since its inception. The SPY, if you didn't know, is the number one first ever ETF. It also happens to be an S&P index ETF, and its annualized returns are 1.5% lower than 9.1%. I'll let you do the math there, and you can see, well, you're in a bit of a rut here, right? What do you do? Well, you hope that this inflation actually comes down. I personally think we're here. We're like at that peak area. We obviously didn't peak today. If you look underneath the headline number, yeah, all right. There was a lot going on there in terms of, you could look at, going to the dentist, what that costs. There's all kinds of things. They break it down into categories there. I don't know if you're interested in that sort of stuff, so I'll spare you the details. But sure, yeah, everything is high. I mean, anything that's up 1 or 2% for the month, right? You look at that and you go, well, it doesn't sound like a lot. But if that pace continues, you're on like an annualized 12 to 24% type of inflation. Well, that's brutal. Yeah, you can't handle that. But, it depends on what media channel you watch, how they're going to spin it and everything. It's kind of sad how they do that. The message here for us is that this really gives the green light for the Fed, which meets later next week. I think it's next week. Gives them the green light to maybe raise rates 1%. If you look at the CME betting odds at the moment, the actual Fed indication shows 50% of people believe a 0.75% raise, and 50% of people, just about 50% of people, believe that they'll do a 1% raise. That'd be a record, right? Nobody's ever seen that. Nobody watching or who will watch this will have ever seen that in their lifetime. So you're really living through some interesting times here. Canada did raise 1%. That's not new for them. That is high for them. That's not new. Bank of Korea raised 0.5 point overnight. That's their largest ever, actually. And New Zealand, they did 0.5 point as well. Both of them said, all of them actually said, we see a path of continuing to raise rates. There's no reason to stop doing this here. New Zealand's now at like 2.5 or something. They're right around us. Anyways, with that in mind, yeah, you got the S&P a little bit lower on the day, the NASDAQ a little bit lower, but it was kind of odd because we started, and I'll use the SPY today because we were just talking about that. If you're not familiar with these candlesticks, there's 3 classes in our client portal where you can actually check it out. But what this guy shows right there is the starting point for the day, that horizontal line. Go a little bit further, right? So that represents a gap, a difference between yesterday's closing price and today's open. We call it a gap. And so we gapped down more than 1%. Just for fun, we looked it up. It's the 4th worst response, meaning a 4th worst gap down on a CPI day ever. Actually, there's only 7 times that the S&P has ever started the day down more than 1% on CPI day. Funny enough, 4 of those times were this year, so it gives you an idea. We're only going on our 7th month of the year, right? So that's obviously really high. The average full day, just looking at it, actually continued down. So what's odd today is the market actually said, no, it's fine. We get it. Inflation's higher. We're gonna be buyers in this case here. So that's the odd part, right? If you had to bet on this, any algorithm or any person who thought like, oh, okay, this is what's going to happen again, anybody who noticed a trend in there of CPI numbers causing the market to gap down more than 1% said, oh, that's going to sell off. And it's out there. Don't think that because you don't know it's not out there. It's odd because the market actually rallied and at one point turned positive. So think about what that is. Is that real buying in there right here? Do we have real buyers? No, that's exciting to see a little recovery, but we can't say that's real buyers. We can't say that because everyone who assumed that history would repeat itself was wrong today. They bet to the downside. They had to get out, which caused buy orders to go through, which means ultimately you have a fake support in there for the moment. We could turn out to be wrong on that. But for the moment, you have to say that is highly suspect right in there. I don't know what's going on there. That's not supposed to happen. Anyways, enough of that. Looking around the market, I don't know if you know, it's Amazon Prime Day. The advisor in me says, hey, if you didn't want to buy that thing the other day, why do you want to buy it now, right? Amazon Prime Day with the discounts. I went home when I got home last night after the show. My wife's like, good news. Those protein bars that you like, they're on sale. I bought 3 more of them. I'm like, all right, but I don't eat that many of them. So she fell for it. Just think about it, right? I mean, come on. Obviously, everybody wants you to spend their money, but do you need that or what? Anyways, Amazon finished up 1% on the day. Tesla's in the news, of course, up 1% as well. The action, if you're looking around, if I were to say there's any action, in the semiconductors. And I know one of you asked about that last week. We used the SMH to talk about maybe that being a higher low and how to buy a downtrend without getting tripped up in there. And so QCOM would be one of those that stuck out today. AMD's another one. It's a little early for them. I would say NXPI. The big caveat for all of this, and that's the fanciest word I'll ever use, is that it's earnings season. So if you're an active trader and you're like, I've been eyeing this thing, I think I'm going to get in there. I found myself a good buy here. Just take a look at their earnings report because you never know. We're going to start talking about that tomorrow, actually, how stocks perform around earnings, the volatility, right? So we'll give you a bunch of examples and things like that. Anyways, looking at some of the weakness here, a surprising weak day for healthcare. That's been one of the stronger areas there lately. It's taken a little bit of a break overall. Industrials, I'll use the XLI for that one. That was one of the weaker areas as well. A couple names to point out. Raytheon, back below the 200-day moving average. Illinois Tool Works, if you're not familiar with them, that's about to break down, or looks like it's about to break down anyways. Banks with little volatility, they are going to be the first major sector to start reporting their earnings. They have, but tomorrow, what do you got tomorrow? JP Morgan, we'll talk about that in a minute. So the big banks out there, that's just people saying, I don't know, I'm gonna hold back. I don't want to be a part of this during earnings season. That's all you got going on there. FedEx lower on the day as well. It's been incredibly weak overall. If we look at the NASDAQ down just a little bit on the day, it was held up largely because of semiconductors. They're a big component in the NASDAQ there, and they, like I just mentioned, had a pretty good day, so there's not much more to say about that. The Dow didn't really stand a chance today, and that's because United Healthcare refused to budge. It was down all day long, and you now know that United Healthcare is the biggest weighting on the Dow. If you've been watching the show, you know why. I'll add to that, Boeing was down 2% as well, and it tried a little bit of a rally, but those two together were enough to hold the Dow from being anything really impressive in terms of, hey, look at that, tried to rally. So if we go back over to the Dow here, a little bit of a rally throughout the day, but it wasn't going to hold on with those bigger weighted stocks trying to pull it down. Oil up 0.5% today. It did come down and officially kiss the 200-day moving average. You won't see that till tomorrow because it's a lagging indicator, remember. It calculates the closing price, so the thing won't tick up until tomorrow, so you'll be able to see that there. Gold up 0.5%. About time. Little bit of a change there. Gold miners, GDX actually up on the day, 2%. So anything in that category, you could use the GLD if you like that. They all look the same. So a little bit of a rally there, which coming off of a pretty nasty and consistent decline, which I thought this was supposed to be an inflation hedge. What happened there? Looking at bonds, you got yields moving a little bit lower again. The 2s and 10s we talked about, not yesterday, but the day before, starting to get attention in the media. I saw that. I was saying, why aren't people talking about this? We've inverted again. what's the big deal? I saw it today because the level of inversion has now crossed into a new record, or at least a 22-year record, if you're looking at that. So that's making its way back into the headlines there, and likely will stay there for a while, just as a friendly heads up. What else do we got? Interesting things going on here. 2 new highs, 3 new lows. The new highs on the day. General Mills. I'll have to admit I was wrong about this one. Well, for the moment, I look like I'm wrong, right? It blasted off, very extended. Look at that sucker, refuses to pull back. You have an area, you can see it. See those tails right there? You have an area where people say enough is enough. I will not pay more than that. That's what causes this breathing that you see in here with these tails. So I would still be suspect of trying to buy it at these prices, but if you own it, as we do, you're happy to see it at highs and staying there, showing so much strength, I should say. Molson Coors up as well. That's going to be new 52-week highs for them. Got a couple upgrades on the day, and that never really hurts, does it? Disney in the news, we'll talk about that in a minute, but it's hinting at a new breakdown. See that little sucker right there? Got a little bit of a base. There's a lot of stocks that look like this, actually. I put a couple on there for you. Johnson Controls hinting at a new breakdown, and Illumina as well. Yeah, that's on the list. So new breakdowns. It's a little bit of a departure from what I've been talking about, and there you go. That's the fanciest word I'll ever use. We normally have been looking at extended stocks. There's a lot of them. I mean, I just, look at the new lows list every day and you find a dozen of them real quick. So I thought I'd change it up a little bit and say, well, what else? What other technical patterns do maybe some of you guys like that I could point out for you? And that's what we have there. All right. Hey, I'm going to do stocks in the news, then I'll take your questions if you have any. If not, I understand. That's how it goes. Delta's earnings beat by 12%. But I talk about this often. Airlines have their own metrics. So with airlines, there's a metric they use called load factor. The load factor came in at 87%. We were expecting 83 or something like that. That's basically a fancy way of saying the percentage of seats that were actually filled. 87%. It's really good for them, which helped them make a profit for the quarter as well. They chose to take that profit and actually pay off debt, so that was a good thing for them, just like you would in your finances, right? You have a little extra money come your way, maybe you pay off some debt. What was the other metric I want to talk about? Revenue per available seat mile. You want a lesson in fundamentals real quick? Revenue per available seat mile, I always say that backwards, but I got it right that time, was 5% higher. That's basically a fancy way of saying the revenue that each seat made for every mile it traveled. They track that. That's an actual thing. You'll see the other airlines say the same thing. The problem was the cost per available seat mile was up 44%. Think about that for a second. Revenue up for every mile that a seat was filled, but the cost was up for every mile that a seat was filled and traveled. So what does that mean? Profit margins, right? Squeezed. That's just one way to look at it. So you look at those numbers. I just basically summarize the whole thing for you. But you look at those numbers and you go, well, that sounds great that we're making more per mile, that everybody's got their butt in a seat there. But if it costs us more, that means we made less of a profit. They still made a profit, so everybody was basically happy with that. And like I said, they chose to pay $1 billion in debt. It was still down on the day. Don't let me get you wrong there. I mean, we still took a hit on that. But traffic is good. All is good. By the way, I should say their international business, they said is back to like 81% recovered pre-COVID. That's how they talk about that there. What else do we have? Oh, let's keep going, man. We got a good thing going here. Apple is up next, as you can see on our list there. So Apple, it was just a downgrade. Citigroup brought them down to $175. They had their price target at $200. You can see on the chart there that puts you way new highs there. Remember, this is a 12-month price target. So back down to $175. They just think little rally here is about all you're going to get for the rest of the year and going into next year. Fastenal. If you don't know, these guys are... They're like a barometer for industrials and the industrial supply market. There, that's it. That's why they always talk about this around earnings. You probably otherwise never hear of the stock. Now, you're probably familiar with the company. You've seen it. Maybe you passed the stores that they have and stuff. Earnings and revenue basically came in as expected. The issue for the 6% drop on the day, they say, you know what? Next quarter, it's going to be a little bit difficult because of inflation. So they were already ahead of the game saying that we can already see it there. Daily sales still coming in at 18% year over year. So a lot of people are like, we're going to take your word for it, right? Things are going to be worse. You're basically giving us the heads up there. That's all that was, right? So there you go. A little bit of a A bit of a lesson today. Google, the CEO said, this is not new. This was not today, I believe. This was the end of yesterday. He said, yeah, check it out. We're going to start we're going to start hiring at a slower pace through the rest of the year. We're just not sure, right? We just want to be careful here. We're not sure what we're going to do. You're seeing that all over the place. Twitter in the news, of course, because they've officially sued Elon Musk. They want him to agree to the original agreement. Elon Musk is like, I don't have to. You know what I mean? Well, they're going to be going to court, and the lawyers will win this one because there's about to be a lot of money spent fighting on both sides. The issue is Elon Musk hasn't divulged his data that he has, supposedly, for why he believes that he's getting ripped off or should pay a lower price or just not have to go through with the deal at all, even not pay the $1 billion breakup fee. So that's what it is. Lastly, we got Disney in here. So Disney has got a bit of a problem, and they want you to pay for it. And this is yet another thing I'm starting to not like about these guys. So they've got the cruise lines, right? Disney Wish, right? Beautiful stuff. It's actually a great time. The experience is amazing. So they said, we're having a hard time hiring people. We're having a hard time hiring them because we got to pay them more. Obviously, the employment world leans towards the employee, not the employer. And they said, we're not going to pay anymore. So what we're going to do is we're going to increase the suggested gratuity that you're going to pay. $2, I think, per day. And tell you what, if you are already, if you book a cruise, you go on a cruise, we're just going to bill you for that extra gratuity and then give that to them instead of actually paying people more. Come on, man. Come on, man. That's a sneaky way of saying that. They had a beautiful little quote, too, that says, like, you enjoy the experiences so much, it's time to let people know how much you enjoy our experience. It's basically a cop-out for we're not going to pay a few more bucks an hour, a day, whatever they do. Tough one there. The CEO, he's had a rough go of it lately. Not a lot of people like him, but they're keeping him around. Another 3 years, right? He signs the extension on the contract there. Okay, earnings tomorrow. You've got, supposedly, ConAgra coming out, JP Morgan, Morgan Stanley, and Taiwan Semiconductors. JP Morgan is on a bit of a bad streak here, right? If you own the stock, got to be a little bit cautious here. 7 quarters in a row, the stock has traded lower on earnings day. Now, this will be tomorrow. If they report tomorrow, it would be during the day. So tomorrow counts as the earnings day. Down 7 of the last 8 quarters there. If you're curious, just because I was too, I mean, you're like me, you get a little curious. Baxter and Eastman, there you go. These guys are both down 9 quarters in a row. They're the worst out of all of them. Lam Research fits in there as well, different industry, down 7 in a row. So just kind of like JP Morgan. If you're curious, Atcor. Do you know Atcor? These guys have the best win streak in a row, and they could use it, right? They're kind of down at the lower end of the range there. 19 in a row that they've beat. They don't report for a while, but I just thought, well, who's doing good? So 19 quarters in a row, what I mean is right here, they report earnings, the next day the stock is up. Right here, they report earnings, the next day the stock is up. Right here, they report earnings, the next day the stock is up. It's just like to verify the data, you go back and look. And if you don't know who these guys are, if you've ever built a neighborhood, they're the people that take the underground utilities, meaning more electrical, cable, fiber optic and things, and put it through their stuff to get it from wherever it comes from at the base somewhere in the neighborhood to the house. That's one of the major, that's the biggest part of their business there. So we'll see. I don't know. It's going well for them. Let's see what questions we've got there. Disney sucks. My sister hated her time at the college program. I've heard a lot of complaints about that college program. I don't think it exists anymore, but I've heard a lot of younger clients mention that they're, hey, we're local somewhat. We're in Orlando, and we get to talking, and not very happy. I don't know much more about that, but there you go. Giovanni's got Microsoft, bought 15 shares yesterday. Okay, 200. Oh, you went for it. At 254 yesterday. I was waiting to buy 15 more shares. You want to swing trade before earnings? Well, that was going to be my first thing that I would say is, hey, you got earnings coming up very, very soon, actually. And so I'm not one that does that. It's just the nature of being a little bit more conservative with deploying cash. I wouldn't do it personally. I don't really care to play around earnings myself. Yeah. Twitter could owe Elon if he countersues misrepresentation. Oh, yeah. There's a battle. Yeah, don't get me wrong. There's a huge battle, and look who they hired. Both Twitter and Elon Musk, the attorneys there, just having fun digging around. Holy cow! Doc's never built a neighborhood. Well, if you do, you start an account with those guys, and they'll come take care of you. You know. Now you know. I don't say I never taught you anything. You know what I mean? Need a Disney. No, Disney doesn't get a fact. You don't get a Disney fact on down days. That's the rule. They got to show some performance. I got plenty of them, but they do not get a Disney. They don't deserve it. They get show me something. That's my rule. Yep. All right, we're picking on them today. I'm gonna wrap it up there. We did what we needed to do. We'll be back tomorrow to do what we need to do all over again. I wish you guys a good rest of your day. Thanks for hanging out with us here, and I really appreciate it, actually. I mean, doesn't seem like a big deal, but really is to us. I appreciate it. And we'll see you then. Adios.